I'm Terry Sacka, and this is Rigged Against You. Today, we're going to talk about explosive silver update, and this is going to be a short but a marathon of raw data, factual raw data that is going to show you exactly what we've been talking about for years. Yes, the manipulation has been in place, but this is all changing now because of the Great Reset, because of the East rising, and the demand for physical silver that is not available. In the COMEX here in the United States, we have about 2 weeks of real physical eligible silver. It is a very serious geopolitical issue and a national security issue because silver is so absolutely needed, not just for industrial, but even the military complex. I mean, we do have 30 kilograms of silver per electric vehicle. This doesn't take into account solar panels and electronics and artificial intelligence, which is going to demand a lot of silver for the infrastructure. This is a big deal. China, Russia, India, and others. And wait until you see this data. If you haven't gotten into silver yet, after this podcast, I don't know why you wouldn't. I project from where we are today, it will be completely reasonable that silver will be anywhere from $150 to $300 an ounce in the near future. And the data is going to show you and back it up. It is merely a great, hard, tangible asset. It's biblical money. It's our constitutional money. Having, regardless of all the digital transformation, the Great Reset going into cryptocurrencies, you are going to want a nice portion of your portfolio stacked away in physical money that can be outside the system. And you can't go wrong with silver. As it outperforms the S&P this year alone, minus this stock market correction that's taking place, it could easily go down 30%, 40%. It's a good cleaning. It needs to be done. President Trump has been making indicators that we are going to go through pain before the good times roll. That is a fact. I believe that is a tactical thing to not just cleanse out the market, but to force the Federal Reserve to start lowering interest rates. We have seen almost a complete halt on inflation growth, which is really good, because we're going to need it, because as we go into lowering these rates, it's going to provide liquidity into the system that will accelerate inflation again. But if we offset that with explosive economic growth, which I do believe comes at this, I think we're probably 3 years away before it really starts to boom. Maybe towards the end of this year, next year, we may see the market start to move. But you're going to see silver outperform the S&P over the next 18 months. There's no doubt about it. And this is going to be wonderful information for you to digest and to pass on to friends. And before I get going, I encourage you to subscribe to the channel. Hit the little bell. From my understanding, you hit that little bell. It'll actually notify you when we do drop a podcast. I don't do many, but when I do them, it's very relevant information. So let me get going and show you right from the beginning what we're talking about. This goes back to the 70s. Now, what this is basically the chart of physical silver. This goes back to 1980. You can see where it was $50. We created a really big cup and handle. We hit $50 again in 2011. And now we're coming off the handle and rising. And you see the arrow on the right. That's where silver is going to be headed, and why this is a really big deal, because it's not only a technical formation, but it's being driven by absolute geopolitical demand, because every nation, especially China and India and others, need the physical silver, not just for solar panels. India is really big on solar panels for their electricity, and China needs it for manufacturing. You are now seeing finally, and I know it's been years, the manipulation has been ferocious because gold and silver prices rising were an identity of a bank killer. We had trouble. Well, now with the Great Reset coming in play and the new cryptocurrency taking over the world as we go into blockchain formations of new money, gold and silver prices rising, well, really gold more so, is going to be a net benefit as we go into potential gold-backed bonds and backing up our stablecoin with gold as well. Silver, they're not going to be able to explode it. I know people talk about silver as $1,000, $2,000. Should it be? Yes. But because it's such a geopolitical and national security issue, silver won't probably get that high, but we will definitely see silver in the area of $150 to $300 an ounce in the near future. purely because of raw supply and demand. And that's the beauty of commodities. If you only have so much of a raw material and everybody wants it, eventually the price has to rise. If they do not rise in the West because of manipulation, it'll be a tremendous arbitrage as the East is bringing up those prices. They'll buy it in the West, take it to the East, and be able to sell it at a profit. So what you just saw there on the chart, that is a perfect example of over the last 50 years where we're setting up for an explosive moonshot of silver. And then we go into here. Let me go to here right now. This is an inflation adjusted. Now, what you see here, now this is attached to like the M2 money supply, what we're printing. But if we adjust the price to inflation right now, about all the currency we've been printing, you can see if we were to get back to just the basic rate of in the 1970s, it would be $196 an ounce. That was at the 1980 peak. We go to the 2011 peak, that puts silver at $71 an ounce, almost double from where it is today. And look at where we are on the right side, now $35 an ounce. It is moving, and we are so undervalued in silver, you can't dispute this raw data. Now let's move on to this one. This is the actual M2 money supply, showing how we're printing. They're sharp. When you see sharp spikes like this, like there on the left with the red circle, this is the ratio that means silver is at risk of a correction. And the attempted corner by the Hunt brothers in 1980 is what brought silver down for all these decades. And you can see there in the middle where it was silver undervalued in the green circle. And then we had the spike in 2011. Look at where we are on the right side right now, an extreme undervaluation in relative to the money printing, the trillions of dollars in printing we have been doing. It is an absolute perfect storm for physical silver right now. And then we go here, and this is the beautiful one. This is called the swap dealer. This red is considered short contracts. This is a doozy. Let me expand this so you can see it. Swap dealers, these are the bullion bank traders. These are manipulators of the market. They hold a massive net short position equivalent to 151 million ounces of silver. So for every dollar increase in the price of silver, these dealers face $151 million loss. Look at the red here on the right. The gray line is the silver price continuing to rise. And look at all the short positions here on the right trying to hold the silver price down. They're trying, but they're not going to be able to do it this time. The United States no longer has global control. We're losing control of the dollar dominance. You have the BRICS coming in with new currency valuation. You have the cryptocurrency great reset on the heels. We're losing control. The world has now caught on to the manipulation of the market, and they're just accumulating the physical silver. Right now in the United States, I think people are just burned out of the narrative because there's always doomsday. You need your gold and silver. This has nothing to do with doomsday. This has to do with a radical fourth turning transformation of the global financial system, and where silver as a raw commodity in demand for industrial need is paramount. You can only get so much silver. Silver doesn't come typically by its own mining silver vein. Now, there is some, but not many. Silver is typically a byproduct of a gold mine, copper mine, and others, and they have to refine that out. So the actual silver supply is extremely limited. And the best way to put it is probably about a 15-year deficit. We are now about 15 years running with what we're mining and recycling. We do recycle about 160 million ounces a year, but when you combine mining and recycling, we are still net negative on the need for physical silver. It's just incredible. The risk of an explosive silver short squeeze is further amplified by this astonishing ratio. This is what I contend is the bigger picture of why America's been able to hold it down, why it's breaking. The ratio right now is 378 ounces of silver sold on paper. This is silver ETFs, the futures market, and other derivatives. For every single ounce, real physical ounce of silver in the vault for delivery. That's 378 people on one side of the street, 1 ounce of silver on the other side of the street, and you say go. Who's going to get it? And it's not like it's just something in a form of money to make money. It's an actual raw material that is needed. In a violent short squeeze, which I believe is coming, they cannot continue to hold on to these short positions, taking these losses that they are. Holders of the paper silver could be forced to scramble for the extremely scarce physical silver to fulfill the contractual obligations. This would cause the price of paper silver products to literally collapse. So if you're being talked into owning physical silver through ETFs or some other form of paper, you're going to make a really big mistake. These will not sustain. While physical silver prices would skyrocket to jaw-dropping levels, potentially reaching several $100s per ounce. This event is what we may fulfill the price target that we implied in the cup and handle pattern that I just showed you earlier. This is big. Why? We know it's coming. It's been years, and I get that. Good news is we're right here. Why? Especially with the stock market going on corrective pattern, potentially 30-40% drop. Why are you still in the stock market? Why are you not diversifying with your IRAs into physical silver? I highly recommend giving Cornerstone Asset Metals a call. Stay away from the big gold companies. They will absolutely gouge you and rip you off if they have gold in the name of the company. 9 out of 10 are very bad news, what we call boiler room salespeople. You want honest silver pricing in a wonderful product. But owning the physical in your retirement account is huge right now because you're going to outperform and you're in physical away from the collateral obligation that stocks and bonds are, because stocks and bonds are collateral to the debt of the financial system. And we still can't say that we're not going to see an absolute collapse of the system. It just depends how we maneuver to try to control bringing it down and then providing liquidity to give us another boom. This is big right here. This is the silver market balance right now. And you can see this goes back to 2015. But looking for the last 5 years, the absolute negative deficit in the balance of physical silver available. And it's worse than this. But when you compare to demand at this level of negative balance, it's who controls the physical silver. That's why you're seeing, and you don't know this, but behind the scenes, you're seeing the Chinese and others taking the physical silver from the West and bringing it to the Eastern warehouses. They know they're stocking up and getting ready. Elon Musk never talks about it, but who's kidding who? He needs a tremendous amount of physical silver for his electric vehicles. 30 kilograms of silver per vehicle. He knows, but he's not saying a word because nobody wants silver prices to rise. But we know, we saw the CEO of Samsung even speak and say when silver is $200 an ounce, here's what it does to the cost of our products. But we're now on the verge of this breaking out. If they try to manipulate it shorter, you're just going to see those in the East buy up the contracts and demand the physical silver be delivered. They know the game and the gig is up. Once silver breaks 35 and 36 closings and holds, it will be explosive to the upside into the 40s, probably near 50 by the end of the year. It'll probably flatline around 50 for a bit because that's ultimate resistance. Then it breaks. Once it breaks $50 an ounce is when we're going to see the epic run towards the $150 to $300 an ounce. Great. So you make yourself, let's say 800%. It's not about that. It's that you're also hedging against the inflation. You're hedging against the whole paper dollar system, and you want to be outside the markets for that reason alone. But look at this. This is the actual global silver production. So I just showed you the deficit we have in physical silver. This is global silver production from mining. It has stagnated and declined over the past 10 years due to the depletion of economically viable physical silver deposits. These are mines, these are veins. Look at how it's declined in the production side. We used to get about a 1.25 ounces of silver per ton of earth. Today, we're lucky to get 1/4 ounce of silver per ton of earth, which is why we're doing what we call a open pit mining to get every literal grain of earth we can to get as much silver as possible. The supply is just not there to meet the explosive demand of AI photoclavic, which would be your solar panels, your electric vehicles, the technology, the military. This is just unbelievable. Take a look at this. This is the key factor driving silver demand growth. Is increasing is mainly solar panel manufacturing. Look at that explosive growth in solar panel manufacturing. Why? Not only here in the United States are they trying to do it, but it's really India and those in the East that want solar panels to provide the electricity because they have a tremendous amount of sun. Here in the United States, we have a little bit of a challenge to this because silver or the solar panels, if they're not placed in the right state or region, they could be susceptible to hailstorms and then it just blows out the whole entire panel farm. That's already happened here a couple times. So you need to put solar panel farms to produce electricity in areas that have a little better predictable weather and doesn't come across with hail or tornadic type of condition. But this is a big deal. And this is just solar panels, mind you. This is not electric vehicles. It's not AI, robotics, computers. It's not military. That's why it's so vital to understand. And I'm showing you how the supply is net negative and yet demand is exploding. Why they're no longer able to hold this manipulation. Let me put this one a little bit bigger here. Overall, the stock market, the black line here is in 2008 and the blue line is where we're probably going. How unusual is it that it's tracking? The headlines are full of stock market rallies, but beneath the surface, the real economy is falling apart. Consumers are beyond broke. Auto loan delinquencies are at record highs. Student loan borrowers are getting wiped out. And the wealth gap is now driving half of all U.S. spending. Big deal. And not just the wealth gap. What they're not telling you is in the stock market itself, the only reason it's been going up over the last year and a half is government spending. It's purely government printing currency, spending it, which is producing somewhat of an economy, but that's not real economy. Real economy is we, the people in small business producing. Now, what they're not telling you, which is the big one, a vast majority of the market growth were foreign investors. And a lot of that's starting to pull out, especially now that we're entering trade wars. And just to give you one more indication that silver is on an explosive track is the lease rates to borrow money for silver. Right now, silver borrowing fees, look at this chart, have absolutely exploded because the demand is needed. And I remember back in the day when we used to trade commodities, literally the raw materials like wheat and cotton. I'll never forget when the wheat contracts, similar to what silver's getting ready to do, these traders were in a panic because they were short. They needed the actual options that people held. And back then we had a company that was involved in options and futures. They were paying a fortune for options. We had options going from $400 up to $8,000. And I think they peaked those options at around $14,000 a piece. This kind of panic is going to take place because as these short sellers manipulating the physical silver market get into the situation where they need the real physical to cover that contract, that's when you're going to see silver prices explode. Right now, the premiums are low, but once that demand spikes, you will see premiums spike too. And that's the cost you pay over spot. So I highly encourage you, if you have not done so, get it now, especially in your retirement accounts. If you haven't done a full allocation or you've come into new money, Go into physical silver right now. You can't beat the short-term gain it's going to have, outperforming potentially that S&P over the 18 months. And if you know people, friends or family or people that are not properly protected, are sitting in cash in the bank or predominantly in the stock market, let them know that cash in the bank and stocks and bonds are collateral to the debt of the financial system. Commercial code 5 and 6 says it can be confiscated. This is a good time to share. This data is about as straight up as it gets. And anyone with a reasonable mind that sees this podcast will know right now, explosive silver update is that silver prices are eventually going to be going to levels none of us will ever imagine. Of course, I know it's going eventually because it's a raw material. And one thing about tangible assets, it's supply and demand. So until next time, God bless you.
With all of the recent changes in the political and financial markets, there has never been a better time than right now to invest in silver and gold. When governments simply print billions of dollars in paper money in hopes of solving financial shortfalls, you know that it is time to buy and hold assets of true and lasting value. Free information is available to you right now by calling 888-747-3309. Whether you are a new investor or you're interested in preserving the value of your retirement accounts, we make it easy for you to make smart decisions for your financial future. The specialists at Cornerstone are here to serve you, work to satisfy your retirement goals, and communicate with respect. Call us right now at 888-747-3309. That's 888-747-3309. Or visit us online at cornerstoneassetmetals.com. That's cornerstoneassetmetals.com.